The used car market just imploded, again. And this time, it's taking America's biggest used car giant, CarMax, right down with it. For years, CarMax was untouchable. A billion-dollar powerhouse that could sell a 5-year-old Honda Civic for the price of a new one, and people lined up to pay it. But now, the same cars they sold for $40,000 in 2022 are barely worth $15,000 today. The bubble has burst, the inventory is collapsing in value, and CarMax's empire is cracking from the inside. So, what went wrong? Everything. Interest rates, oversupply, falling EV prices, repossessions, you name it, it's all hitting at once. The used car market was built on borrowed money, inflated values, and pandemic-era hype. And when that air finally escaped the balloon, it hit companies like CarMax hardest. The business model that looked genius in 2021, buy high, mark up higher, and flip it fast, has become a ticking time bomb of depreciating assets. CarMax is now sitting on thousands of overvalued vehicles it can't sell without losing money. Cars that were financed at record high prices are being traded in or repossessed, flooding the market. Consumers who bought in the hype are underwater on their loans, owing $10,000 to $20,000 more than their car is worth. And CarMax, which built its empire on quick turnover and high financing profits, is now choking on its own inventory. Let's talk numbers. Back in 2021 and 2022, CarMax routinely bought used trucks and SUVs at insane prices. A used F-150 that would have cost $28,000 in 2019 was selling for $45,000 or more. Now, those same trucks are barely hitting $25,000 on the auction block. Electric cars are even worse. Tesla's price cuts shattered the used EV market. A used Model 3 that CarMax bought for $42,000 last year is now struggling to sell for $18,000. It's a bloodbath in the used EV segment, and CarMax can't offload them fast enough. The bigger issue is trust. CarMax built its reputation on simplicity. No haggling, instant offers, easy financing. But now, those instant offers are insulting. Customers are seeing cars they bought 2 years ago lose half their value, and CarMax is offering thousands below even that. People feel scammed. That stress-free buying experience has turned into a nightmare for both the company and its customers. And it's not just resale values. Financing has turned toxic. CarMax made a fortune off its CarMax Auto Finance division, pushing customers into high-interest loans when rates were still low. But now, with interest rates topping 8% or 9%, delinquencies are skyrocketing. More borrowers are defaulting, more cars are being repossessed, and the used market keeps getting flooded with vehicles nobody wants at those inflated prices. This isn't just a CarMax problem, it's a market correction of historic proportions. For years, the used car industry defied gravity, and CarMax led the charge. Now, it's paying the price. Their profits have fallen sharply. Their stock is down over 40% from its peak, and investors are losing patience. Dealers across the country are slashing prices just to move inventory. Some are losing thousands per car, but they have no choice. Because if they don't sell now, those same cars could lose another 10 to 15% in value within months. And here's the wildest part. CarMax can't even buy cheap cars anymore. The company's algorithms, once fine-tuned to predict demand, are completely out of sync with today's market. They either overpay and take a loss later, or underbid and lose inventory to smaller competitors and private sellers. Meanwhile, online dealers like Carvana and Shift, who were already bleeding cash, are in no better shape. The entire used car market looks like a bubble that's finally popping in slow motion. But CarMax's situation is worse because it doesn't just sell cars. It finances them, trades them, and guarantees them. Every part of that cycle depends on prices staying stable or rising. And right now, every part of that cycle is breaking down at once. Their financing customers are defaulting. Their resale cars are tanking in value. Their margins are evaporating. And their brand reputation is taking hits from every direction as consumers realize that the CarMax offer isn't worth what it used to be. And what's coming next could make this even uglier. Millions of lease returns and repossessions are expected to flood the used market in 2025. Automakers are cutting prices on new cars, especially EVs, forcing used prices even lower. And consumers are broke. Wage growth hasn't kept up with inflation, credit card debt is at an all-time high, and fewer people are willing or able to pay $700 a month for a used car. CarMax is trying to respond. They've slowed down purchases, laid off staff, and tightened financing standards. But those moves might be too little, too late. The damage is already done. Used car prices aren't just falling, they're collapsing. especially in the high-margin segments CarMax relied on. Trucks, SUVs, EVs, their bread and butter, are now the biggest losers in the market. And while prices are crashing, the costs of holding inventory keep climbing. Every day those cars sit on the lot, CarMax pays insurance, depreciation, and interest on borrowed capital. Their once efficient supply chain is now a financial anchor, dragging profits into the red. It's not just a slowdown, it's a spiral. And the company that once symbolized confidence in the used car market now looks more like a warning sign for what's coming to the entire industry. Because here's the reality: CarMax isn't alone. Every dealership that inflated prices during the boom is now paying the price. But CarMax, as the biggest player, will be the first to show how deep this hole really goes. And if their numbers keep falling, it won't just be a corporate problem. It'll be a full-blown economic signal that America's car market, once the hottest in the world, is entering its coldest winter in decades. Because think about it. CarMax doesn't make cars. It makes markets. It buys, sells, and finances based on confidence. The moment that confidence disappears, the whole system collapses. And that's exactly what's happening right now. Buyers aren't confident anymore. They're not walking onto lots ready to sign. They're walking in with calculators, checking auction prices, and realizing they can buy the same car for thousands less from a private seller. That's not just a pricing issue, that's a trust issue. CarMax used to be the safe middle ground, better than shady corner dealerships, easier than buying from strangers online. But now, consumers are catching on. They're realizing CarMax's no-haggle policy doesn't protect them. It protects CarMax. It allows the company to set whatever prices it wants, even if the market has already moved on. And with prices falling so fast, that system is breaking apart in real time. Look at how fast the collapse is spreading. A few years ago, CarMax's inventory turnover was lightning quick. Cars would move within weeks. Now, vehicles are sitting on lots for 2, 3, even 4 months. The company's average inventory age has skyrocketed, and that means they're sitting on assets that lose value every single day. That's death in the car business. When your inventory loses money just by existing, you're not a retailer. You're a hostage to depreciation. And the numbers prove it. Wholesale prices have plunged nearly 20% year over year, according to Manheim auction data. That means every time CarMax buys a car, it's almost guaranteed to be worth less in a matter of weeks. Multiply that by hundreds of thousands of vehicles across the country, and you start to understand how catastrophic this can get. CarMax isn't just losing money, it's losing momentum. And momentum is everything in this business. What's even more alarming is how consumer behavior has shifted. During the pandemic, people were desperate. They'd pay anything to get a car. Now, people are cautious, strategic, even fearful. They're holding onto their cars longer, avoiding big loans, and waiting for prices to bottom out. That means fewer trade-ins, fewer purchases, and fewer financing opportunities. And for CarMax, which depends on constant turnover, that's a death sentence for growth. You can see the ripple effect in the company's balance sheet. Profits are down. Loan delinquencies are up. Inventory write-downs are climbing. And investors? They're fleeing. CarMax stock once traded like a rock-solid retail giant. Now it's behaving like a speculative tech startup in free fall. Analysts are cutting price targets left and right, and there's growing concern that CarMax's debt structure could become a major liability if this downturn lasts another year. But here's where it gets really dark. CarMax isn't just battling the market, it's battling its own data. Their entire system relies on predictive algorithms to price cars accurately. But those models were trained on a stable, inflation-free, low-rate economy. Now, we're in the opposite environment. High inflation, rising unemployment, and collapsing used car demand. Those old algorithms can't keep up. They're producing prices that make no sense. Too high for buyers, too low for profit. And that's why you're seeing chaos in their listings. Scroll through CarMax's website right now and you'll find wild inconsistencies. The same model, same year, same mileage, priced thousands apart depending on the region. That's not strategy, that's confusion. It shows a company scrambling to catch up with a market that's already left it behind. And meanwhile, the competition is sharpening their knives. Local dealers, online startups, and even automakers themselves are jumping into the used market. Ford and GM have launched certified used programs with direct online sales. Tesla is dumping used models at clearance prices. Even Toyota and Hyundai are offering extended warranties on used cars to lure buyers away from third-party dealers. CarMax's sales data reflects that shift perfectly. Transaction volumes have plunged. Their per-vehicle profit margins, once the envy of the industry, are now shrinking every quarter. Even worse, they can't cut prices fast enough to keep pace with the market decline without wiping out what little profit they have left. It's like they're stuck between two cliffs, one called unsellable inventory and the other called massive financial losses. And this is where the panic sets in. Behind the scenes, CarMax has started doing something it swore it never would, quietly dumping inventory at wholesale auctions just to get it off the books. They're taking thousands in losses per vehicle, but it's the only way to stop the bleeding. This is the same CarMax that once bragged about never needing auctions, about being too efficient, too data-driven to fall into that trap. Now they're back where they started, offloading cars for pennies on the dollar while trying to pretend everything's fine. Meanwhile, their customers are furious. Social media is filled with posts from people who bought used cars at pandemic highs, now discovering their vehicles have lost half their value in 2 years. Some can't even trade them in because they owe way more than the car is worth. And when they go back to CarMax hoping for help, they get lowball offers that feel like betrayal. The very company that convinced them prices would hold steady is now the one telling them their car's worth less than a used iPhone. And it's not just the customers who are angry. CarMax employees are feeling it too. Former staff are speaking out online about shrinking commissions, layoffs, and impossible sales targets. What used to be an upbeat, high-energy workplace is turning into a pressure cooker. Sales associates can't hit their numbers because customers simply aren't buying. The finance department can't push loans because lenders are rejecting more applicants. And the lot staff? They're watching cars collect dust in the summer sun. But here's the thing. This isn't just a temporary slump. This is structural. The car market has fundamentally changed. We've entered a new era where affordability trumps everything. Consumers are no longer dazzled by touchscreen dashboards or big horsepower numbers. They're hunting for value. They want reliability, low maintenance, and reasonable prices. And CarMax's entire business model, built on inflated markups, slick marketing, and convenience pricing, doesn't fit that new reality. Even worse, technology is moving faster than they can adapt. The rise of direct-to-consumer models, peer-to-peer sales, and AI-driven pricing tools is cutting out middlemen entirely. People can sell their cars on apps like CarGurus or Facebook Marketplace and get more money instantly. Why go to CarMax, where the offer is lower, the fees are higher, and the process is slower? The company that once disrupted dealerships is now being disrupted by the very digital transformation it helped inspire. And that's the cruel irony. CarMax is being crushed by the same trends it rode to the top. When the market was rising, their data-driven model looked revolutionary. But now that prices are falling, that same model is turning on them like a loaded gun. Every algorithm, every valuation, every pricing formula they've built is based on a world that doesn't exist anymore. A world of constant growth and endless demand. Now, they're operating in a world of contraction, fear, and financial fatigue. And this could just be the beginning. Analysts are warning that the next 6 months could be make or break for CarMax. If consumer spending continues to fall, if interest rates stay high, and if new car prices keep dropping, the used market will face another wave of price destruction. And when that happens, CarMax won't be the only one bleeding. The ripple will hit automakers' certified pre-owned programs, leasing companies, rental fleets, and even lenders who depend on stable resale values to calculate risk. The used car market, once the backbone of the American auto economy, is now becoming its biggest liability. And at the center of it all, CarMax, the giant that once symbolized innovation and trust, is struggling to survive a crisis it never saw coming. And make no mistake, this crisis isn't just about falling prices, it's about the collapse of an illusion. For years, the used car industry operated on hype, the illusion that cars were appreciating assets, that demand would always outpace supply, and that consumers would always be willing to stretch their budgets for convenience. But that illusion is gone. People have woken up. They're no longer willing to pay luxury prices for worn-out vehicles. They're no longer buying into CarMax confidence. They want transparency, and they want value, and CarMax can't offer either right now. The market data tells the story clearly. Vehicles that were once guaranteed sellers are now sitting unsold for months. Used luxury sedans like BMW 5 Series and Audi A6, once hot commodities, have tanked in resale value. Trucks and SUVs, which CarMax bet heavily on, are depreciating faster than any other segment. And EVs, CarMax's new growth category, have turned into a nightmare. Some of those cars are dropping in price so quickly that by the time CarMax finishes processing and listing them, they're already worth less than what the company paid. And the bigger problem? Consumers are starting to associate CarMax with bad deals. That's brand poison. The moment your company name becomes shorthand for overpriced, you lose the market. People talk. Word spreads fast online. TikTok, Reddit, YouTube. These platforms are filled with people exposing insane CarMax markups, comparing offers, and showing how the company is lowballing sellers while overpricing inventory. What used to be CarMax's biggest advantage, brand trust, is now evaporating in real time. You can already see it in foot traffic. CarMax lots that were once buzzing with customers are now eerily quiet. Sales teams are waiting hours between appointments. Buyers are walking in, checking prices on their phones, and walking right back out. They're not stupid. They see the same car listed online for thousands less. And with more people willing to travel for a better deal, local loyalty doesn't mean what it used to. CarMax's national footprint, once its biggest strength, is becoming a liability because their prices are out of sync with regional realities. Meanwhile, the ripple effects are hammering every part of the company. Their auction division is losing money. Their financing arm is being crushed by defaults. Their digital division, meant to be their big future play, is underperforming because consumers simply don't trust online prices anymore. Even their partnerships with automakers and rental fleets are being reevaluated as those companies try to offload vehicles elsewhere, faster and cheaper. And this is where things start to look systemic. Because CarMax isn't just another dealership chain, it's the barometer of the US used car market. When CarMax hurts, the entire sector trembles. Their quarterly reports are used by banks, analysts, and manufacturers to gauge market health. So when their profits plunge, when their inventory ages double, and when their financing delinquencies spike, it sends a chilling message. The used car bubble is truly bursting. Even Wall Street is starting to take notice. Analysts are calling CarMax's current predicament a structural correction rather than a temporary dip. Some are comparing it to what happened to big-box retailers like Sears or Circuit City, giants that ignored market shifts until it was too late. Because CarMax isn't just losing money, it's losing relevance. The old model, mass inventory, physical lots, aggressive financing, feels outdated in a world where consumers can sell their cars directly online in minutes. And here's the kicker. CarMax has no clear path forward. They can't simply slash prices without destroying their margins. They can't pivot to cheaper inventory without diluting their brand. And they can't expand financing without taking on more risk. Every move they make leads to more pain. It's like a chess game where every possible move is checkmate. But perhaps the most revealing sign of the crisis is how CarMax itself is communicating. Their executives are using vague corporate language, talking about market adjustments and consumer recalibration. That's code for panic. Behind those polished statements, the company is staring down a brutal reality. The business model that once made them unstoppable is now dragging them into a financial abyss. And the worst part?